Over the last couple of days, there has been a lot of panic in the market because silver and gold ETFs witnessed a sharp and sudden crash. In fact, some silver ETFs fell by almost 20 to 24% in a single trading season, which is massive move by any standard. Naturally, when investors were shocked, but here is where the confusion begins. If you look at the actual price of silver, whether on MCX futures or global spot markets, the fall was much smaller, roughly around 3 to 4%. So the obvious question is, if real silver fell only 4%, then why did silver ETFs crash 5 times more? Is there something wrong with ETFs? Was this an manipulation, or did investors simply misunderstand what they were buying? Let's understand this clearly. First of all, it is very important to know that a silver ETF is not the same as a physical silver. An ETF is a financial instrument that trades on the stock market just like a share. While it is backed by silver, it is marketed as a price does not move only because silver prices. It also moves due to demand and supply of ETF units, liquidity and its investment sentiments. इन सिंपल वर्ड्स में बोलूँ तो ETF का प्राइस सिर्फ सिल्वर नहीं, मार्केट का साइकोलॉजी भी डिसाइड कर सकता है. Now let's come to the most important concept behind this entire crash, which is net asset value or NAV. NAV simply means the actual value of the silver held by the ETF. For example, if the silver held by an ETF is worth 20 rupees per unit, then ideally the ETF should trade close to 20 rupees. But in the recent rally, that depend happen due to the heavy retail participation and speculative buying. Many silver ETFs were trading at the 25 or 28 and in some cases even 30 rupees, while their actual NAV was much more lower. That means investors were playing a premium of 25 to 50% of the real value of silver. So why did so many investors rush in that such high prices? One reason was speculation ahead of the union budget, and there was more like a stronger expectations in the market that customs duty on precious metal be increased. Investors assumed that physical silver would become more expensive, and ETFs were seen as the easiest way to take exposure without worrying about the storage or purity. As a result, many uh, money rushed into silver ETFs very quickly. Demand rose sharply, but supply of ETF units could not adjust immediately. This imbalances the pushed ETF prices far above their fair value. But markets don't ignore reality for a very long period. Once the budget related uncertainty reduces, panic buying slows down and profit booking started. At that point, the inflated premium began to collapse. The silver price itself fell only slightly, but the extra price that investors were paying over the NAV completely disappeared. इसलिए ETF का फॉल 20% दिख रहा है, जबकि सिल्वर सिर्फ 4% गिरा. This was not a crash in silver, this was a correction in mispricing. There were also some global factors that added pressure. The US dollar strengthened the slightly, which actually doesn't goes with. It usually puts short-term pressure on precious metals. Global risk sentiment has improved a lot, and some political tensions eased and leading to profit booking in gold and silver worldwide. However, unlike ETFs, future markets and physical demand tend to be more disciplined. ETFs are largely driven by the retail flows, so where fear and excitement can exaggerate both rallies and crashes. Now, the most important question is, has silver's long term story broken? The answer is completely no. Silver continues to have strong industrial demand, especially from electric vehicles, solar energy, electronics, and the broader green energy transition. These structural demand drivers have not disappeared overnight, but this episode teaches us that the investors is an important lesson that ETF को physical asset समझ के blindly मत खरीदो. Always check the NAV, always see whether the ETF is trading at a premium or a discount. When premiums become too high, risk also increases sharply. To summarize, this fall was not a failure. It was of a silver fundamentals. It was not proof that ETFs are bad instruments. It was sentiment driven correction after excessive speculations, and markets always punish those who chase price instead of value. If this explanation helped you understand what really happened behind the silver ETF crash, make sure to share it with others so they don't panic unnecessarily. Thank you for watching.